Rajesh Jejurikar here, the Executive Director and CEO of the Auto and Farm sector at Mahindra and Mahindra, to talk about how their performance has been. Rajesh, welcome to the ETNA studios. Congratulations. Lots that went by this quarter, but still you came out strong. What were the toughest moments in the quarter gone by that you had to deal with?
Hi Aisha, hi Harsh. Good to be in the studio with all of you. Yeah, it was a strong quarter, and you just spoke about that. And it was not an easy quarter either,
Yes.
like you rightly said. There was literally every kind of uncertainty. We started with, the gas shortages coming out of the war, and then moved into labor shortages, and of course, a kind of unprecedented commodity inflation that we've kind of gone through. So you literally had a moment every day. So it's hard to capture 90 days of moments, but I think we came out of it good. We're feeling good about the fact that all the three key segments had a good volume growth. The SUV grew 15%, the tractors grew 18%, and the LCV grew 20%. So, all the three segments had a strong volume growth and a decent overall growth in PAT as well. For the auto, it was 21% PAT increase, and for tractors, it was 15%. So, in the context of everything that happened, we feel good about what happened. We also had two interesting announcements, which of course you've covered. Day before yesterday, we announced the spin-off of the trucks and buses business from M&M and merging it into SML Mahindra, as it's now called, which I think will be really strong for us to create a new CV entity, which is the combined entity takes the revenue of that business to 6,000 crores with a 6% market share. So it makes us a kind of serious player in that segment now. Also, late last evening, we we have this last mile mobility business, which is the electric three-wheelers, which has seen a very strong growth over the last 2 years. The EV penetration in that segment moved literally over 2 years from 12 to 40%. And we have roughly a 40% market share, and we are number one player there. So we had an additional fundraise now with a new investor coming in who valued the business at 10,800 crores. So that becomes a standalone unicorn. And of course, we're talking about listing it sometime towards the end of 2027 calendar. So it's a good lead-in into what could be a very interesting IPO.
Well, yes, but I'll try to unpack this, and starting off with the margins, right? And what kind of an impact raw material prices have had? How much of that pass-through has already been undertaken? And what's yet to come?
Yeah, so the commodity inflation, like I mentioned a little while ago, has been unprecedented. Just within the quarter, we've had on the auto side, over 400 to 500 basis points increase in commodities. So just to recap the question on price increase. So we took a 1% price increase in January, a 1.3 in April, and a 2.7 now in July. So we've actually taken 3 rounds of price increases to kind of prepare ourselves for this. 2.7 was a little higher than what we normally take at one point of time. One of the reasons we took that is so that we don't have to keep taking price increases. Otherwise it kind of unsettles the market, and the customer is prospecting over a period of 6 to 8 weeks before they finally make their decision. They start with the price and then find out the price by the time they're ready to book, which is not really a great thing for customer experience. So, we kind of said, let's just do this because there's so much uncertainty that you can't keep reacting every month to the way commodities are going. We have had some margin compression, but we think it's very reasonable. We continue to be amongst best in peer margins, both on the auto and the tractor side. We think that the auto quarter one margin we should be able to sustain going into quarter two, maybe improve it a little bit depending on what finally happens to commodities. Tractors is going to see a volume impact in this quarter because of season shift, and tractors very sensitive to season shift. So as Navratra moves from September last year in quarter two to this year starting 11th October, that's quite a significant shift. So tractor volumes will skew to quarter three rather than Q2.